Hello, everyone. My name is Chris Rawley. I am the CEO of Harvest Returns, and I'm excited today to talk to you about why we are bullish on agriculture as a self-directed IRA investment and why it makes a safe investment in turbulent times like we now face. I started this company about 5 years ago when I discovered as a long-term self-directed investor, primarily in real estate, that it was very challenging to diversify into farming and agriculture. I'll go into why I think that's a really compelling asset class later on in the presentation. But at the time, I discovered it takes a lot of capital, a lot of know-how, connections, and just a learning curve that I just wasn't prepared to face. So I decided to start this company, and that's why we founded Harvest Return. And I'm here today to tell you how you too can invest in agriculture. So first, I want to discuss a little bit about how the food system in the United States has been changing, and not just changing, but rapidly evolving. You can see up in a little word cloud that people are really becoming, I don't want to say picky, but their food preferences are becoming more and more fragmented. So we're hearing about types of diets and types of eating patterns that just didn't exist 20 or 30 years ago. And so you can see some of these up here. More and more preferences, more and more consumers have a preference for organic. People like non-GMO, grass-fed livestock or cage-free eggs. Of course, there's a lot of plant-based and vegetarian and vegan eating. You'll even see pescatarian, which is fish diets where they only consume fish as the protein. Of course, there's the high protein diets like keto. And one of the ones that we want to call out is the preference for locally grown food. No longer are consumers just satisfied with opening a package of frozen food or not understanding where their food came from. They want to know where their food was grown, who grew it, how it was produced, and what goes into it. And more, they want to have the confidence that their food was locally grown so that they can know the traceability of that food. So at the same time, agriculture as an industry is having to rapidly evolve. You can see here a couple of examples of indoor production, what we call controlled environment agriculture. You'll also hear the term vertical farms, hydroponics, aquaponics, aeroponics, things like that, where people are growing food indoors with, in many cases, no soil, and they're doing it in a very sustainable manner, using a lot less water than field-based agriculture takes, using fewer to no pesticides, controlling for things like infestations and disease and droughts and weather. And the beauty of indoor agriculture is that all these conditions can be controlled for and precisely regulated, even computer controlled for. Some of the hydroponic farms we've worked with are controlled with a smartphone app where the pH balance of the water and the ingredients in the fertilizer are all precisely controlled in the amount of water depending on exactly what type of crops being grown. So it's a very new way to produce food, and it's starting to pop up all over the United States, and there's a lot of reasons for that, which I'll get into. One of those reasons is because people are starting to question our food supply. So for quite some time in the US, we've been fortunate and blessed to have a very stable and secure food supply. Really, since the Great Depression, we haven't had any times where there have been empty grocery shelves. And that stopped, of course, in March of this year when COVID happened and we saw trucks not running. We saw farms, in many cases, having to dump crops, dump milk because there was no way to get them to market. And then henceforth, besides some of the hoarding behavior, we saw grocery shelves being emptied of meat and produce and things like that. So people are not taking their food supply for granted as much as they were just a year ago. And we think that's a good thing. And so one of the results of that is people are starting to really question how their food is produced and where it's produced. And distributing the agriculture system is a very important thing for the United States. About 80% of the leafy greens we eat are produced in Salinas Valley, California, and shipped across the rest of the country. And of course, that takes fuel, and that takes time, and in that time, and that takes energy. And then during that time, the produce is not as fresh, it's not as nutritious, and it's just not as healthy for you and tasty as food that can be grown locally within 30 or 50 miles of where it's consumed. So we see a lot of demand for hydroponic farms. indoor farming. And so in addition to that, there's about 4 reasons that we like to talk about when we talk to people who might be interested in investing in a farm or farming or agriculture as an asset class. The first of all is just global demographics. Right now, there's approximately 7 billion people in the planet. By 2050, that will grow to 10 billion people. So 3 more billion mouths to feed, more or less. And that's going to take a lot of increase in agriculture production. Additionally, as societies tend to get wealthier, they tend to eat more protein. And that's happening. We've seen that happen over and over again throughout the developing world. So more protein takes more land, takes more agriculture production. The next piece is simply the returns. So you can see up in the graph that U.S. farmland, which is just one piece of agriculture from 1970 to 2016, outpaced the annual return on investment for the S&P 500. So that's stocks, AAA bonds, REITs, that includes real estate REITs that many of us are familiar with, gold, and the consumer price index. So the returns themselves are appealing, and there's a wide variety of agricultural investments, and I'll talk through a few of those on a later slide, but also with a variety of risk and return profile. So safe diversification is another reason. Agriculture is not correlated with the stock and bond market. So it doesn't matter what the stock market's doing. Cows are going to continue to grow. They're going to continue to eat and gain weight. Crops are going to continue to grow regardless of what's going on in politics, in the election, or a pandemic, or any other sort of negative news. That's what makes agriculture such a great diversification tool for a portfolio. And that we've seen that with institutions who have been investing in a big way in agriculture. University endowments, pension funds, large family offices have been diversifying their portfolio for decades. And up until very recently, it has been a challenge for the individual investor to allocate some of their portfolio into agriculture. And that is the main reason we built Harvest Return, is to do that. The last reason is to improve the food system. So we talked about shocks to the food system with COVID, and we talked about diversifying and decentralizing how food is produced here in the United States. So when you invest in agriculture, you can take a part in that, in making a more robust, resilient food system that produces healthier food, which in itself is a good thing. So the one thing that hasn't changed in agriculture, quite honestly, is the way it's financed. The agricultural finance system has been pretty much static for the past 50 years. It's all based on providing Midwest row crop farmers who are doing large scale conventional production with low cost guaranteed loans. If a farmer is trying to do something unique, or an agriculture entrepreneur is trying to do something out of the ordinary that's not just sort of conventional row crops, they can have a harder go at it and getting ag funding. And that's the other part of what we do as Harvest Returns, is to help farmers get flexible sources of capital. So when you invest in agriculture, what do we really mean? Well, there's a number of different ways to invest, and a number of different types of products which you're investing in. So up in the top left is timber. Timber is we consider a form of agriculture. Where there's a number of varieties of hardwood, softwoods that go into anything from construction to furniture to paper production. And timber is a asset class that has been largely available to institutions and high net worth for years. It takes a long time, even though the returns can be excellent. It takes a long time to see those returns, 15 or 20 years in some cases. But timber is a great way to diversify your portfolio with a slice of agriculture. Permanent crops, that's things like tree crops, here shown apples, but also things like almonds or hazelnuts. Nice returns, although you might take a few years to get those returns because the trees take a while to mature and produce those returns, but it's a very compelling investment class. Up on the top right, we talked a lot about indoor agriculture. These are very capital intensive, as you can imagine, high-tech greenhouses or vertical farms or tower farms. They take quite a bit of capital once they're up and running. They tend to just throw off produce much like a utility would, where it's very expensive to build a power plant, but once it's going, it operates pretty efficiently and produces electricity for a very cheap price. And so do these indoor farms, where they're producing not just 1 or 2 crop cycles a year like outdoor agriculture, but maybe 6 or 8 or 10 even. There on the right side is row crops. Most of us, when we drive through what we consider the country, we'll see miles and miles, acres and acres of corn or sorghum or wheat or rice or soybean production. As far as you can see, row crops are kind of the typical type of Midwest ag investment that people think of. And there's a number of farmland REITs and things like that that are investing in these. One of the reasons we don't really do row crops on the harvest returns is because they're very tied to what the commodity prices are doing. Over the long term, farmland and row crops are a good investment because the land tends to appreciate. But it's hard to produce into a short-term type of investment, short exit period or shorter exit period, less than several years. So row crops, there's some ways you can invest in them, but we generally do not do that. And the bottom left is what we call value-added processing facilities. So every time somebody spends $1 on food, approximately only 3 cents of that goes to the farmer who produced it. So there's a lot of middlemen in the way between the consumer and the producer. And so more and more farmers are realizing that if they vertically integrate their operation, either by building their own processing facilities, for example, we'll talk a little bit about livestock here, but their own processing facilities, packing facilities. In this case, you're looking at a picture of a CBD production facility, modular production unit that converts hemp into CBD oil, which we all know is a pretty popular type of supplement in product right now. So helping farmers vertically integrate so they can either take some more of the margin out of the crops they produce or sell even directly to the consumer is a big deal. And then that direct consumer piece, we are really bullish at Harvest Returns, no pun intended, about grass-fed livestock. We see grass-fed cattle being in a higher demand from consumers and from restaurants and things like that, because people like the taste of it better in many cases. But from an investment standpoint is what's really appealing to us. So grain-finished livestock is grain-finished cattle is generally what you're going to get if you go to the grocery store. You can find the grass-fed if you look in the right place, and it's going to cost you more. Because it's somewhat of a luxury good, the prices are less volatile. They're not tied necessarily to the commodity prices, which will rise and fall due to various factors. So we like grass-fed livestock, and we do a lot of grass-fed, actually notes collateralized by the cattle. So that's something that we've had several offerings on, and we'll continue to have in the future. So hopefully by this point, we've convinced you that agriculture is an appealing asset class, that it's worth diversifying your portfolio with. And one of the things that we like to have at Harvest Returns is to make it easy for people to access. So our platform is all online. Everything's automatic to invest, via a few button clicks. Once you have all the information assembled. And we also allow investors, some of our offerings are as little as $5,000 to $10,000, which is a lot smaller than some of the typical agriculture investments where they might be over 6-figure minimum ticket sizes, minimum investments. So with that, we allow you to diversify your portfolio not only into multiple types of agriculture, but multiple offerings, multiple geographies, which is, of course, is a risk reduction method. So if you decide you want to invest with your self-directed IRA, the first thing you need to do is make sure you have a self-directed IRA and it's funded. And once that's done, you can come to our website, you can register. You set up an entity profile. So you're going to put the information from your self-directed IRA in there, the tax ID number, the name, what it's being held in, and a few other pieces of information. Then you go on a platform, you pick the offering that looks interesting to you. You read through the offering documents. We're happy to answer your questions and get those questions as a sponsor. And then you invest, you sign the documents, and then you're able to fund your investment and receive passive income from that investment, whether it's quarterly or annual payouts, and then capital gains as that investment exits anywhere from several months to several years. So we'd like you to find out more about the Harvest Returns, and the best way to do that is go to our website. We have a lot of educational material on here. I've kind of just scratched the surface on investing in agriculture with this webinar, but we have links to other webinars and links to blogs and things like that, articles that can help you understand the asset class. You can feel free to give us a call. So I appreciate your time today, and I hope you check out agriculture and why it's such a compelling asset class. Thank you.